boy Bleed. Everybody listen up. Let's get it. I'm trying to put money in your pocket. That crypto wallet. That bing bada bing ching ching big profit. Even when the market's sideways, I'm looking for ways to get paid. I'm checking my coins around breakfast, then again around bedtime. Bet this, it's not financial advice, but I'm always. It's been a long day, I mean a long week, maybe a long year, so let's get something clear. We're gonna stock up on some party favors later on. Tell everybody they're invited, you should come along. Best to bring your good foot, ladies gonna be dancing on the ceiling. Cocky and appealing, possibly revealing. Getting sideways like a bridesmaid, that she vibrate. If you a lightweight, hope you hydrate. We gon' tip the bottles back, busting out the fat sacks. People wearing costumes, chewing on a mushroom. Something like a wonderland, understand? Going down the rabbit hole with my kinfolk to another land. Damn, I said we do it like this. Magic carpet riders on some third eye shit. Mr. Pine Cones come a long, long way, so everybody get sideways. Sing it. I can't wait till Friday. Everybody's getting sideways. Pass the bottle back my way. Everybody's getting sideways.
What is going on, believers? I hope everybody's having a good morning. Lunatics Unite. It looks like we might be kind of on the precipice of a little bit of a change in the market, but we did get finally, it's looking like the death of USTC. It looks like the UST Classic is going to be shelved in favor of USTN, and there is a reason for that. It looks like Ed, Alex, and Max have decided that they want to get rid of USTC, swap it to USTN, and turn it into a stable or as stable a token. It's an algorithmic fungible token, which basically means that it's UST. There's going to be different parameters, but the problem that they are having right now is that they don't have control of it. Terraform Labs at the end of this has control of USTC, and they are not able to control what goes on there, and are thus a little bit nervous about what it is that they would do in light of any kind of problem. So who knows what's going to happen? But since we are in here, good morning to everybody, and if you would, let's try to get to 69 likes. 69 dudes, and let's see what happens there. Hit the like button on your way in, hit the like button on your way out, hit the dislike button if you dislike the content. Do something, man. Don't just sit on the sidelines. You know what I mean? What's wrong with you? Ugh. Anyway, so it looks like we've got some answers. Are they the answers that we're looking for? Not exactly, but we were looking for answers, so we've got them, and we can go from there. And we'll see what happens in the short term. But here is the good news. Let's go check out the screen over here. This is what the chart looks like. That's not the big news. Here's the big news. Kim Kardashian's big ass can't get in crypto for 2 years. Kim Kardashian pays over $1 million to settle SEC charges linked to a crypto promo on her Instagram. So Kim Kardashian, hold on one second, guys. All right. So anyway, yeah, I was so excited to see you guys this morning that I forgot to plug in my laptop, and it was about to die if I didn't plug it in. It was like, help me, daddy. I need energy. So here we are. Now, let's get back to Kim Kardashian's big ass. Kim Kardashian agreed to pay more than $1 million to settle SEC charges for failing to disclose a payment she received for touting a crypto asset on Instagram. Now, you see here, you see her here pretending to be Amber Rose for some reason, Kanye. She also agreed not to promo crypto assets for 3 years and will cooperate with an ongoing investigation. Kardashian has already gotten heat from regulators and investors over the June 2021 post. And I have no, oh, here we go. What she said was, are you into crypto? This is not financial advice, but sharing what my friends just told me about the Ethereum Max token. Investors sued her, former NBA star Paul Pierce, and superstar boxer Floyd Mayweather earlier this year over their promos for Ethereum Max, accusing them of artificially inflating the value of the asset. Is that true? Hell yeah, it's true. That's exactly what happened. Look, if Kim Kardashian's in your wallet, you're going to need a big wallet. You know what I mean? So, old Thumper can't do anything for about 3 years. So let's move on from her. Did Tesla shares drop trigger this meme coin drop? And the answer to that is a stupid no. And why do we keep doing this with Watcher Guru? Why we do it, I don't know. Sometimes I feel like I'm just plucking my own eyeballs with like needles when I go to the Watcher Guru anymore. Like they just make up articles. And you look, if you look at the charts and if you look at it on Shiba Inu, the disclosure was right over here. So can you argue that, yeah, Shiba Inu went down 8%? And could it be because, oh, noes, Tesla had a bad report? Like, I mean, come on. Jesus Christ, Watcher Guru. You used to be better than this. But let's talk about something that doesn't piss me off this morning, and that is Luna Classic. So, as we are sitting right now with Luna Classic, we've got a couple. Whoops. Well, I screwed that up. All right. So, we've got a couple of points of contact down here that we were kind of trending on. You saw my video last night. If you didn't see my video last night, what's wrong with you? But then we saw it test again. Then we saw this big red candle as it fell down the support line, which of course would mean that we were coming down to test something. And I've got a big channel right here, but you could probably say that the test line was probably going to be somewhere around 30. Didn't even come close. Turned around immediately. Started to spike back upwards. Looks like we've kind of tested this line. Now, I had this orange line in here, by the way, because what we were going to see, what we're going to see is we're going to see the announcement, and we're going to see it by a specific time. But Binance decided they don't want to tip the hat because they're not looking at they're not looking at trying to get on this pump. Like they want to get on this dump over here. So it's entirely possible that Binance has already done their stuff right here to maximize the burn, and they're not trying to do it up here. So it could all be done already, and we're just waiting for the announcement now. So, but what they don't want to do is, if they tell you that we're going to do it at exactly a specific time, then people are going to pump the charts and people are going to buy in order to push that money up. So, we'll see what happens. All right. So, I thought you were always right. You seem to be always wrong. Just saying. Well, first of all, no. And secondly, it's a slogan. Grow up. Act like you've been in ads before. All right. So we're going to move off this. Here are the documents. The Terra Classic Repeg Update Proposal. This is what's going on. This is the big news in the marketplace right now. And they are proposing to restructure USTC via creation of an algorithmic fungible token, USTN. Now, what is an algorithmic fungible token? Well, USTC is an algorithmic fungible token. So what they're doing is they're replacing one algorithmic fungible token with another one, just using big words to make you seem like, oh, I'm pretty fucking smart if I say that. So it's a fungible token, which means it's a tradable token, and it's algorithmic, which means it uses an algorithm. So basically, it's the same goddamn thing you already have in your wallet, only with a new name. So USTN is what it's going to be called instead of USTC. Now, here are some disclaimers. These are some reasons that they're doing it. These are legal disclaimers that they use. So here's the mission statement, and it says, we believe a decentralized economy needs decentralized money. We see USTN as a groundbreaking financial innovation offering unique costs and benefits that differentiate it from custodial stablecoins, which it is not representing itself to be. Non-custodial crypto collateralized stablecoins or under collateralized fully converted stablecoins. The proposed USTN key difference versus UST would consist of higher censorship resistance, and higher censorship resistance, by the way, it means that there's going to be a lot of breakers in place to prevent anything catastrophic from happening, like that catastrophic drop that we saw before. A smart contract-based decentralized reserve management system, a much higher level of exogenous reserves with a reduced growth capacity, which would indicate that about 60% of what they're doing is they're attempting to create something that if you want to cash out and if everybody wants to cash out, the funds just exist for you to cash out at any time. Now, if you remember on UST, when it started to pump, like there was a lot of money in USTC when it was UST, and it was just like you couldn't cash it out because algorithmically speaking, I think the number was close to 40 billion, which was the total value at one point of both tokens. Like half of the value was in UST. It was a nightmare because once the cash out, where does it go from there? You know what I'm saying? Because if everybody cashed out at one point from UST, then it would have absolutely wrecked the price of everything to begin with. So it's weird. It's very weird how this was. All right, so we got the proposed UTN also has a much higher level native interest rate set by market forces, augmented capital controls. This right here is a little bit of a layout to give you kind of an idea of what it's of what this is, the product market fit. And we're going to skip a little bit of that because that's just Alex, Ed, and Max doing their blah, blah, blah sort of thing, right? So this is the order of operations. Number one, the first thing that's going to happen is they're going to use some of the time between now and the CosmoWasm upgrade to rewrite the Terra Classic modules sitting atop the current outdated Cosmos SDK. After the CosmoWasm upgrade completes, airdrop a new token, which is going to be USTN, to existing USTC holders on a one-to-one basis. So if you have 1 million USTC, you're going to have 1 million USTN, excluding a TFL and related party blacklist along the lines of previous public discussions. Remember, TFL had blacklisted some of the wallets that they thought were manipulating and trying to do exactly what ended up happening. The supply of USTN would then be collapsed by 97% in a subsequent step. And this is where it gets interesting. So the first thing that they're going to do is there's 10 billion or 10.8 billion USTC right now. So they're going to give out 10.8 billion USTN. So whatever you have in USTC, you'll now have in USTN. Regarding the 49.79% of USTC supply in the blacklist addresses, instead of airdropping USTN to them, airdrop the USTN that would have gone to them into a community pool instead. Mimic the effects of the previously discussed USTC-based one-off burn via the new USTN token by applying a burn rate of approximately 1 UST market price percent to the airdropped USTN, leaving all USTC intact, but signaling that on a going forward basis, we intend to back USTN and not USTC with the protocol assets. So if there are 10.7 billion USTC equivalent stablecoin tokens in circulation today, and USTC is 3 cents, USTN's supply at the end of the USTN to equity swap would be 97% below current USTC equivalent supply for a current USTC holder. The community would agree on a swap rate for Luna Classic to USTN. The amount of new Luna Classic to be airdropped per each burn USTN. This proposal assumes a 48.5 to 1 Luna Classic to USTN swap rate. Now, again, we're using about 3 cents. So here's what you're kind of looking at right here, right? And this is the part that's going to be like, oh shit, that's going to be a lot. There are 10 billion USTN at the end of this. There's going to be. So what they're talking about is they're talking about creating 485 billion new Luna Classic and giving you 485 billion new Luna Classic. Now, for your information, adding 485 billion to the price action right now is going to drive the price down by 7%, because it would represent about 7%, maybe 8% of the current supply. So you would be adding and you would be diluting the current price by doing this right now. Commander, if you want to look, you can do whatever you want with my music. Go to believescrypto.com. If you want to download the song, it's 99 cents. So go to believescrypto.com and you can download the song and you can do whatever you want with it. And when I say whatever I want, don't make $1 million off of it. If you make $1 million off of it, I better get something for it. Don't play. All right, so the community would agree to the swap rate. Then we would execute the debt for equity swap, creating a new supply of 504 billion Luna Classic, a new supply. So the total is going to be 504 billion, 49.8% of which would go into the community pool, and 253 billion would go to the off blacklist USTN holders. Stake the USTN holders 253 across the existing validator set, thus improving network security and applying the standard 21-day staking lock on newly minted Luna Classic. Migrate 80% of the Luna Classic in the community-owned smart contracts into the community pool and create a Terra wrapped Bitcoin functionality, which doesn't currently exist, to securely manage the reserves Bitcoin collateral on chain and ensure community control over the Terra wrapped Bitcoin at all times. Now that's important right there. What you're seeing with that is they are saying, look, don't trust us. Don't trust us as Terra rebels, because we're Terra rebels. We want to wrap our Bitcoin with Terra so that you guys can see it in that wallet and you will know exactly what's going on at any time. Like, this is just for full transparency. This is for full transparency, so we'll be able to see what's going on. So next up is going to be create a smart contract auction to swap the lunk to the community pool lunk to the Terra wrap Bitcoin at a sufficient to fund the reserve. Hold on one moment. All right, so reopen the swap with extremely tight parameters, thus aggressively taxing USTN, which inevitably exits the system at first, and then slowly widen the swap parameters over time. And then we're getting into why USTN instead of USTC. After extensive input from the community, we decided that executing a previously discussed debt for equity swap via new USTN carried several compelling advantages over the previous plan of mass burning USTC. Democratic legitimacy. We respect the free will of USTC holders. We'd maximize the holders' democratic choice by not unilaterally burning their USTC. We'd allow USTC holders to retain their original tokens in the event of a future airdrop by Luna 2.0 or any other entity. We'd allow UST holders to retain any residual value of their USTC after we communicate. So USTC will still exist. We're just waiting to find out. The USTN. We're still going to. What we're going to do is we're just going to make a third token. So the USTN will be what's pegged with Luna Classic, and then USTC is still going to be out there. So if anybody ever wants to do anything with it, it will still exist. Or if Luna 2.0 wants to do airdrops to make things up to people, remember Luna. There's been discussions multiple times about this not being the end of the airdrops, that there might be more airdrops to come for Luna. because I think I got like 220 or 230 of them or something like that. And you know, and then we deflect inevitable legal accusations of seizing or destroying others' USTC without their consent, specifically USTC subject to legal claims within the Luna Foundation Guard. By taking the USTN route, we wouldn't be interacting with the LFG or other wallets. So this is because there might be, again, legal claims for USTC. This would not affect that at all. And then it would break with TFL by creating a new token. We'd underscore the break TFL while also emphasizing USTN's more prudent and decentralized implementation of UST's original version. The main disadvantages are the airdrop execution uncertainty, given how much USTC is uncentralized. So don't worry about this because there's plenty of different tokens that are out there doing it. These guys are not familiar with some of these macro tokens that have just these crazy caps, and they're transferring trillions and trillions of tokens. So it's going to be fine, but you know, they're a little bit worried about how that's going to be. Data integration. We'd have to integrate this new token into major arteries of the DeFi ecosystem, such as Uniswap and Curve, web portals like CoinMarketCap, and list the token on centralized exchanges. The CEX listings in particular will cost a non-trivial amount of time and money. So, you know, going through a USTN would create a new token, and that would require listings. So, you know, you're just like it's just like a brand new token. So the feature set is a balanced restructuring of bad debt. Shrink USTC equivalent supply in as one-off of a manner as possible to return USTC to one USTN, $1, while compensating USTN holders with equity in Luna Classic that our community could afford. That's also material to USTC holders' existing balances of USTC. So, you know, the swap is going to be there to create more. Hopefully, what we'll see is a bunch of people come over, and like, you know, the recommendation, unfortunately, for me would be just based on this, dump the USTC. Somebody's going to buy it, of course, but if you're holding it, then I would be wondering, as people are reading this, what the price action is on this. As a matter of fact, let's take a second and go look and see, and duplicate this one. $31.98, down 1%. Yeah, if I'm holding USTC, it is time to get out. There might be a pump. You might get a little bit of bump, by the way. Remember, as soon as there's enough of a dump, like if you see a big ass red candle on Terra Classic pop up all of a sudden, I mean, you would want to buy it, right? You know what I mean? Like, whew, I would be going. Yeah, I would be going for that. Also, I'm seeing here that there is an update on Burns and Top Burner. All right, Binance is now up to 5.7 billion. So Binance burned 5.6 billion tokens on this last update. So let's get over here and let's see if they've got an announcement. If that's the all right, so they are doing. Oh, so we don't have an update from Binance yet on the live, but let's go over here and let's look. We just saw right here 3 minutes ago 5.665 billion Luna Classic were burned, and more were added into the circulating supply. No, they came out of the circulating supply. There we go. All right, so now we're seeing something good. All right, so we've seen a reduction in the circulating supply, and we've seen 5 billion tokens get burned by Luna, by Binance. So that's a pretty good start. Price is not falling. Well, the price should be falling. Look, we want 12 to 15 to 20. We want 100 billion tokens being burned over a period of time. We don't want 5 billion tokens being burned. We don't know if that's the end, because if that's the end, then it's going to be anticlimactic. Look, I'm here to tell you, there's still, look, the 1.2% burn tax burned 3.6 billion and Binance burned 5.7, which means that 9.3, almost 9.4 billion have been burned so far. That's a good amount, but let's do the pen to math. 6.9 trillion is what we're looking at. You know what? Let's do a calculator. Gotta remember, guys, numbers still matter. The facts still matter. 6.9 trillion is what we have, right? Million, billion, trillion. And we're going to divide by the burn that we've had so far, which is basically 9.3, right? 8.2. Yeah, 8.2, 9.2. So let's go with 9.2. Divided by 9.2 billion. That means 750 weeks is how long it's going to take to burn off that supply. And that's at the current price, not with diminishing returns or anything factored in. So 750 weeks divided by 52 weeks in a month means 14 and a half years is how long it's going to take for that Luna burn to actually do something. So when you're looking at it and you're seeing a sell-off, you're seeing a buy the rumor, sell the news event. That's why you're seeing it, because that's how the number, I mean, it's math, right? So we might see a spike in the prices. We might see a little bit more. Like, this is the start. We don't know if that's the end of it. That could just be one purchase that they've made. That could be just one thing that they've done so far. So, keep your eye on it. We'll see the price trend in one direction or the other. And you got to remember, we're starting to see a pump in the rest of the crypto market. When we see a pump in the rest of the crypto market, we have been seeing a dump in the Luna market. So Ethereum is on its way up. Bitcoin is on its way up. Bitcoin's trading about even and just look green. But Ethereum looks like it's on its way up, and you're starting to see a lot of green in the altcoins right now. So I would say just give it a little bit of time here, and maybe you'll see. I mean, you're gonna see something one way or another. So we'll see. All right, so back over to this. Recollateralize the reserve. Find out on our own sufficient exogenous collateral backing for USTN, Bitcoin, or something else, so that the new USTN could have enough exogenous backing to be safe. Based on our conversation with potential outside investors, we believe 50% Bitcoin. So what they're going to do is they're going to buy enough Bitcoin to stabilize probably about 300 million. So we're going to be talking about 1.5 billion. I mean, 150 million. Sorry about that. In Bitcoin is probably what they're going to be looking to collateralize. Reserve decentralization, manage the USTN reserve in a passive, fully on-chain programmatic way to eliminate key man risk, maximize transparency, and increase investors' confidence during volatile market periods by making protocol operations fully and publicly visible. Overhaul the capital control system, figure out everything that went wrong with Terra Classic's prior CCS and materially upgrade it. And then retain Terra's lack of fiat umbilical cord, which gave Terra a unique layer of decentralization and regulatory insulation relative to fully collateralized stablecoin such as USDC. In the late 2022 or early 2023, open the Luna Classic to USTN swap with very restrictive parameters. Then we're going to talk about the debt to equity swap. First, we mapped all the assets of Terraform Labs and key related parties, which we could theoretically use to capitalize USTN. The community already owns 4.75% of all Luna Classic supply. Community smart contracts, the LFG, and TFL related party address collectively control at least 49.8% of all USTC supply. Then you can see over here who's got the biggest level of the supply. Then there are three groups of relevant entities, which is the Luna Foundation Guard, the community-owned smart contracts, and the TFL-related parties. Then you have off-chain assets. The 53.5 million of off-chain Avalanche, BNB, and Bitcoin are beyond our reach. We strongly oppose the proposed redistribution of these assets to re-depeg UST holders because it arbitrarily prioritizes them, who likely sold out of their USTC at much more affordable prices over current holders, and thus represents an expropriation of wealth from the Luna Classic USTC community. However, our understanding is that these assets are wrapped up in legal processes beyond our control. The on-chain assets in Terra's prior system, Luna collateralized not just the USD stablecoin token, UST, but 21 other stablecoin tokens as well, interchangeable at Oracle prices determined by several data feeds to TradeFi FX market. As of this writing, the only 3 stablecoin pools of any significance were the USD to USTC, USDR to SDC, and KRW to KRTC. As an unbacked token, USTC's intrinsic value dropped to 0 when TFL disabled the Luna Classic swap in mid-May, creating a blockchain equivalent of a debt default. USTC's intrinsic value today has 3 sources: the option value of the Classic chain, recollateralizing; the option value of 2.0, partially recollateralizing, or an unclear relationship with USTC holders, share in the airdrop of 50 million of LFG off-chain assets to the extent that the airdrop takes current USTC ownership into account. We aren't sure how this will work, and we don't know when that's going to happen. So that will be, don't sell your USTC when this all starts to happen. So thus, despite the USTC lack of formal backing, USTC has consistently traded at a very high correlation to Luna Classic, but also at a large market cap discount, reflecting the reality that any sustainable recollateralization of USTC couldn't overly dilute Luna Classic holders or leave a dangerously low equity buffer. USTC has also shown significant sensitivity to large upward moves in Luna's value. The Luna Classic per USTN airdrop parameters for the swap, 48.485, will ultimately have to be fixed in a governance vote, balancing Luna Classic holders' tolerance for dilution with compensating USTC holders fairly well. So remember, what they're talking about is, this is pre-swap, and let me pop this up here so you can see it a little bit better. You can look here and you can see, like, currently we're talking about a total supply of 6.9 trillion. And what they're talking about now with 10 billion market supply is they're talking about dropping USTC supply after this conversion to 343 million supply and adding 503 billion new Luna Classic to the pool. Now, we've got 5 billion burned, 9.2 billion maybe total, probably a little bit more, but here we are. We've got a burn process that, according to all the math, takes 14 years at this current level, and they're wanting to add 503 billion new Luna Classic to the total. So that's not good. Now, of course, if it burns significantly faster, then who cares, right? So post-swap, where we'd end up. This is where we'd end up after the swap. The ecosystem in this example, we'd end up with USD 172 million of USTN, backed by 147 million USD worth of Bitcoin. In this model, there would be significant amount of Terra wrapped Bitcoin. I'm just going to use Bitcoin, by the way. The excess money, whether in Bitcoin or USTN or something else, would bootstrap infrastructure essential to re-enabling cross-chain liquidity via protocols. So this would be where everything would kind of lay afterwards. And it says, I know you guys can't see it because this is kind of a pain in the ass to look at, but they're talking about the community pool, what it would look like pre-swap USTN. And then what they're saying is basically you would get half your tokens after they did their swap thing. And then they would kind of squash it down to 175, and there would be a tightening on it, and then it would be backed entirely by the wrapped Bitcoin. A USTC holder with 1,000 USTC would keep his 1,000 USTC and additionally have 30 USTN, which would be valued at $30. So from 1,000 USTC, which is currently valued at $30, you would get 30 USTN, also valued at $30. Okay, and 48,045 new LUNC at $15 staked across the active validator set with a typical 21-day lockup. So basically, through a completely voluntary process, the Luna Classic protocol would be buying back the USTC holders' debt at a premium. A Luna Classic holder would face a 7.3% dilution in this example of their total supply. In return, he'd have voting control over the viable new product, USTN, with a unique balance of decentralization. So we're going to need a whole lot of talk to us like we're dumb to try to figure this whole thing out. But they've got a very complicated, this is a very complicated process that they're trying to do. So first of all, what they're trying to do is give you a 1-for-1 swap. And that 1-for-1 swap is from 10 billion tokens, right? Then what they're going to do is they're going to drop that by 97%, which means that your tokens are going to drop to 343 million from 10.8 billion. That's to get it in line with where they want it to be. Then they're going to further dilute it by giving you only half of that, and then the other half is going to be converted to Luna Classic, which is going to create 503 billion more Luna Classic in the process. So then here's the reserves and the decentralized basics. Capital control systems, capital controls versus convert. Here we go. This is what matters right here. This is what everybody's looking for, right? Modeling Luna Classic burn rates in a communicable way is very difficult because of the number of assumptions required. A simpler mental model would look like this. The key burn rate driver is going to be the Luna Classic price per token. A lower Luna Classic token price results in more Luna Classic volume burn per one USTN put into circulation. The key burn rate driver is the USTN adoption. Under the pre-LFG Luna UST system, when $1 of UST was minted into circulation, arbitrageurs would burn $1 worth of Luna. After Luna's 2021 crash and bailout, which seemed to result in significant dilution over Q2 and Q3, the Terra protocol reoriented towards a 25% Bitcoin collateralized LFG, which, after netting out many manual steps, should have burned around $1.25 worth of Luna for every additional dollar UST minute. However, both of those systems featured high instability, which caused significant dilution to Luna holders when it became severe. A 60% collateralization ratio would burn less upfront, but would have higher stability, far lower volatility, and virtually no death spiral risk. So now, here's where we're looking at an extremely crude estimation of USTN's impact to Luna Classic shares looks like this. Not factoring in any growth in on-chain utilization from other dApps might look like this. And then this doesn't have a time frame at all. So if the USTC total supply is a certain amount, then either this is not done right or they're not making sense. Okay, so they're not going to cap. Okay, so here's the idea. They're not going to cap USTN, is what this says. So this is they're looking at the market cap for Luna Classic, right? And then the token supply, and then the Bitcoin reserves, and then what it would take. They're just looking at what it would take here, right? For every 1 billion of USTN put into circulation at a 60% CR, USD 400 million of Luna Classic supply at a market determined VWAP would be burnt. So for every billion, they would be burning 600 million in Luna Classic supply. So that's what we're talking about now. At USTN, 600 million in circulation and a 50% appreciation in Luna Classic from current levels, all dilution from the debt to equity swap would be reversed. At you 5 billion, which we think would be easily attainable within 12 months. Luna Classic's supply would be reduced by 2 trillion from current levels, 2.5 trillion from post-dilution levels, and Luna Classic's per token price would be 12 times higher than it is today. So what they're saying right now is that where they are is they think that this process will create a 12x over 12 months. So that being said, that's a pretty decent move, but it should be with the caveats that we're looking, and you can see right here now the price is starting to dump because people are starting to do the math and they're starting to realize, yeah, that's not happening. So Terra prior peak to 19 billion circulating. At Terra's prior peak of 19 billion circulating UST, Luna Classic holders would be looking at a 40x return relative to Luna Classic's current price. So here's what they're saying. We got to get USTN out. Once USTN is out, assuming mass adoption and that people start investing in it and they start holding it, and the more they hold, the better off Luna Classic burns. So that's the way that it works. And it's just basically rebuilding the entire ecosystem. So one thing to remember is the original supply started September 20, and it was exactly 1 billion Luna Classic tokens. And by the time it was done in a little less than 1.5 years, or around 1.5 years, there was 343 million supply left. So after all of these dilutions, then we are looking at, listen, I'll take a 12x. I mean, I'll take a 12x on my money. And if I take a 12x, then I'm doing that with the understanding that the market cap right now on, wait a minute, let me get over here. That I'm doing that based on the fact that I'm seeing a market cap of 2 billion. If I see a market cap of 6 billion, then that would be 36x. So I'll take that. Like I'll take those numbers. All right. So the key burn rate driver is going to be on-chain utility driving higher tax revenues. In the old Luna UST system, the chain never attained meaningful on-chain utility outside of the Anchor protocol and the DeFi protocols that were direct derivatives of Terra's anchor-driven liquidity bubble, which was Kujira, Prism, and Nexus. This is a key driver for Do Kwon's Luna 2.0 updated ecosystem strategy, which aims to build a financial system around pre-existing utility, not over-financialize and repeat the Anchor mistake. This is an intelligent approach which our protocol would emulate because there's no precedent for a chain of truly successful non-DeFi dApps. This is very difficult to forecast, but the industry is ready and able to launch it. However, it's critical for our systemic stability for our protocol include use cases outside of hyper-financialized DeFi. Key burn rate driver, third-party real-world assets, partially replacing need for exogenous collateralization over time. So they're looking at real-world assets, buildings, blah, 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 stuff like that. Regulatory comment. This is regarding the stablecoin legislation reported being drafted by Washington, D.C. We don't know anything about that other than anyone else. It's obviously aimed at the now defunct Terra model, but based on the little we've read thus far, it widely misses the mark. We've noted the U.S. financial regulatory regime is already extraordinarily hostile to all kinds of stablecoins. U.S. banks today aren't even allowed to hold USDC, essentially an e-dollar, and probably the closest thing the U.S. will ever have to a widely adopted CBDC on their balance sheets. However, that does not stop people from around the world from transacting between crypto tokens of their choice. So they're just basically saying here, regardless of the U.S. currently climate, any national regulator is going to have a big problem whenever a token markets itself as equivalent to that country's cash currency, when in fact it is significantly less exogenous collateralization that country's cash does. A protocol which advertises its tokens as equally as good as USD, when it is in fact very different, is basically trafficking in counterfeit currency from the perspective of a reasonable national regulator. So we need to always be extremely candid about how our model differs from the USD or whatever other fiat currencies may choose to reference in the future. So there you have it. Probably going to see a dump before people start to realize what the opportunity is. The first thing that you see, the first thing that you get is always reactionary, right? So we're getting that reaction right now. We're getting that sentiment right now where people are, oh wow, they only burned 5 billion. Not only did we only burn 5 billion, but we also have a new token coming that's replacing our old token, and then that reunification is going to take billions and billions of dollars in order for it to work. So the ecosystem definitely will work. And first of all, let me also say this. I'm saying this as if it's not a great idea and that it won't work. It actually will work. Like, this is actually not a bad idea at all. If I'm trying to launch something and this really comes out as a very nice idea. Okay. Let me preface everything with that. The difference now is that you are going to be expected to actually be an investor in a cryptocurrency and not a guy wishing for some pie in the sky. Okay. This is going to require the people who are here because they want to be part of something life-changing. The crazy type run that we wanted to see with the burns and stuff like that are obviously not going to happen. This, we're not going to get a zero dropped unless, and by the way, we can have a zero dropped, just so you guys understand. So we're trading at 33,022 right now. And I said, we could be at a $7.5 billion market cap based on the volume that we've been trading. Market cap is 2 billion right now. And this volume was up to 3 and 4 billion at one point. So the market cap could go up to like 7.5 billion if we just had, look, I mean, we're not going to have diamond hands all over the place, but there's going to be some hands, right? So we're talking about this 2 billion market cap could easily become $7.5 billion market cap. But if it became 6 billion if it became a 6 billion market cap, then we would drop a zero and it would be down to, whatever it's down to at this point. So, it's a tremendous opportunity. I wonder if there's any additional governance being proposed. There's nothing proposed at this point. So 27,000 new that I've earned, 96 there. All right, so that seems to be where it is. That seems to be what we're doing right now. I think what we need to see right now is to see how this burn starts to play out. The one thing that we're looking at is we're looking for circulating supply and max supply to start to get a little bit closer to each other. And once we start to see that happen, then we'll have a little better idea and a little better concept of what it was. Now, again, I predicted when we looked at this number, I really predicted that we would have like 12 to 15 billion based on the volume. So they're obviously not taxing all the people. There is some underlying free tax, maybe not everybody who's doing transactions is doing anything. But we did have a significant reduction both in total supply and in circulating supply. So that's not nothing. We've just gone down 5 billion tokens in our overall circulating supply, which by proxy means that the dollar per token that you currently hold did go up as trading goes on. So there's still that. We're waiting for KuCoin. We're waiting for a lot of different people to do a lot of different things that'll make this look a lot different. And we're in the beginning of this market where it's all, where we're in the figuring out phase right now. And I think it's important to point out we're 20 minutes into the Dow Jones and it's on a big green candle. The SPY is pumping. US oil is pumping. The DXY is not pumping, which is also a good thing. We're starting to see the stock 600 and the UK 100 are both moving in positive directions. So it's entirely possible that the old crypto pump is about to happen. Now, that's Ethereum, Bitcoin, and everything else in the altcoin markets. So we'll see how these things kind of play themselves out. But as you can see right here, we did see a little lift up to about 1310 from Ethereum just a little while ago. I think that, to get over a rally, to say that we're moving anything in more than just a bad direction, this thing right here is going to need to get up into this area. We're going to have to break this. This is a long trending resistance line that's been happening since going back to the top of the market. So we're going to need to see this thing kind of play itself out. When you come up here, by the way, and you look at the day chart, you can see here on the day chart that we've got our resistance levels, and we've been pretty good on these resistance levels, but we're starting to reach the end of whatever pattern is forming. Whatever sort of pattern we've got going on here, we're reaching the end, which means that we're going to have to go one way or we're going to have to go the other way. And I'm not sure which way we're going to go, but it sure would be nice if it went up. And it looks like we're going to find that out before October 21st. Now, remember, in October, the average increase has been like 16 to 20% lift. So we could use that relief rally of 16 to 20%. We got a 20% relief rally from where we are right now, which is at 1300. That would be another 260 onto the market, and that would put us up here at 1560. That would actually break us out of that resistance right there. So let's go. I mean, that seems to be that would seem to be the play. But we're going to need to see some runs on Bitcoin. We're going to need to see some runs on everything right now. And you look at, by the way, the Bitcoin resistance is about the same. We still just can't seem to break out, but it's so close. Like we need to close over 20,300. We need a couple days to close over that. And if we see that, then that's when it'll start to feel a lot better. We've minted 2 green weeks in the last 2 weeks. So if you did nothing but hold from the bottom over here, then you're up for 2 weeks. That's not nothing, but you are down on the monthly, and we're still down on this monthly, waiting for it to pump in some way. So the question is, should you sell? Listen, if you're looking for a pump, if you're looking for a minor pump and you're not looking to make that life-changing money, then yeah, sell. I mean, like there's no reason. Like if you're looking to get one of those crazy pumps, right? Then all the data just came in and you're not getting that crazy pump. If you're in it to win it and you're in for the long term, like mine, like nothing that happened today affected me in any way, except like I said before, it would be cooler if we could burn more supply. And if we burn more supply down at the bottom of the chart, then we would be in way better shape. That's the only thing that is different for me today. Because not for nothing, but a couple days ago, I was trading in this area. So, like, I don't care. But it does bring to light that it is going to take a lot longer. And there is a plan, but the plan is going to have to be dumbed down and explained to people in a way that's way less technical than what these guys just tried to explain it. So nerd alert. It's time for us to figure out how much to get to 5 or 10 cents. Yeah. I mean, you could reverse engineer an answer for that. Thank you for $2 bomb. Abby, how much to get to $2.10? How much to get 5 cents? All right. So it's going to be a combination of factors. Market cap is going to have to be probably 10 billion, and supply would have to be 500 billion. So current price action is 0.00032. We're going to need we would have to get down about 2/3. Actually, we would have to get about 2/3 down, and then we would have to get about a 10 billion market. Then we have to get about a 10 billion market cap. That would seem to be the play. But anyway, I mean, we're going to have to let this thing play out. Right. So listen, guys, one thing you're going to have to remember is this is the question right now, whether you were in this for the long term, whether you wanted to get rich or whether you were just trying to flip and make a buck. Okay. I bought mine 10 million. I bought 10 million for 1.7 BNB. So I paid, it's roughly $400. It was 270. It was like $400 basically, right? So my $400 right now is 3,000, almost 4,000. And I don't care, right? Because I'm in it for the long term. I could take my money out and I could move on, but I mean, where's the fun in that? You know what I mean? Like, let the price look, the price comes down a little bit. If the price comes back down here to this one right here or this one right here, this is your buy zone. This is where you buy more, because guess what happens? It's gonna run again. Like it always runs again. What you people are gonna forget is where it came from. Like we did this, just a couple weeks ago. Like here we are in August 24th at 301. Here we are at August 19 at 40860, and it ran all the way up to 5945. So if you weren't part of this giant run, I mean that's on you, but it's going to take a little while. And everybody has said, by the way, it's going to take a little while. Now, listen, I've told you that they're excited. I've told you that they've been deeply into this. I've told you all this time, everything. And the reality of it is starting to set in. And the question, by the way, somebody just asked, what is the exact number by Binance? The exact number by Binance was 5,665,469,203.866. So that's what the number is. 5,665,469,203.866. So that's the number that was burned. Now, you can see right here that there's going to be some more dip. Probably, we just saw it a few hours ago. Like if people are freaking out, they're like, well, these are prices that we haven't seen since 9 p.m. last night. I mean, give me a break, right? Don't act like this is your first time investing. Shit, it's going to go down. It's going to go up. Guess what? They're going to burn 5 billion more next week. They're going to, it's going to keep going. You're going to see the implementation of more burns. Now that we know that this can happen, then we might start to see people get involved, and we might start to see some even more significant burns start to happen from others, because here is now how the top burner list looks. And the top burner list now looks like Binance at 5.6 billion, the 1.2% tax at 3.6 billion. So we really have at this point 9.2 billion burned over the course of since the burn was implemented, not including MEXC, not including anything that anybody else has done so far. So there's a massive amount of burns that we're still It's not the number that you're looking for, but guess what? It is a number, and it's something to start with, and we'll see how it plays out over the next little while. But guys, it's time for me to wrap this up. I got to get to work. So this is not financial advice. My name's Bleaves. I am always right. You guys be very careful in your trading. If you sell off, you sell off, right? But it would seem kind of silly to see something. If nothing else, you're going to have USTC tokens. You're going to have USTN tokens. You're going to have Luna Classic tokens. And they're going to be burning some of them. They're going to be, look, you've only got one way to go, and that's up. You're not going down much further. I mean, even if you dipped half of what you got right now, so what? It's going to burn more tokens. And once we get to a level of real and consistent burn, then, you're going to see this thing start to blow up. I mean, you really are going to see this thing start to blow up, and you're going to see significant reductions in supply. A year is not that much time for a 12X, especially if you got 10 grand in it. I got 3 grand in it, and I'm not touching it, because in a year, if it does what they say at a minimum, that's 36,000, right? I mean, why not hold my 3 or 4,000 for 50,000 or close to 50,000 a year from now? And they're not guaranteeing me anything, by the way. The whole thing could collapse in a house of cards. The whole thing could go sideways, or the amount of burn that they're doing is very conservative, and it's not as significant as what's really about to happen. So I'm gonna hold on and see. This is not financial advice. My name's Bleaves. I'm always right. I will see you guys again for Bedtime with Bleaves tonight, and we will talk to you again very soon.